And first up, we've got Chris Michael, who is a co-founder and CEO at OzoneAPI. And Chris, you're going to tell us about APIs and open banking, which is so fascinating, the story around, why that happened and how you're managing that with financial institutions that are largely very closed, and how open banking really changed that landscape. So I'm really excited to hear from this.
Thank you. Thank you very much, and welcome everyone. I'm going to give a brief introduction to myself, talk a little bit about the kind of birth of open banking in the UK and the role of the Open Banking Implementation Entity, or OBIE for short, how we developed the standard for open banking in the UK, and then some of the other things that the OBIE does or has been doing in terms of monitoring, and how that's playing out in the UK, and then specifically looking at some of the use cases. What are the kind of popular use cases for open banking, and then talk a little bit about what's next, what's happening next, and then sort of lessons learned. So my name is Chris Michael. I'm the CEO and co-founder of Ozone. My other co-founders are Hugh Davis and Freddie Guyara. We all were working 5 years ago as independent contractors for the Open Banking Implementation Entity, helping develop the standards and lead the market development work to grow usage and adoption of the standards. And 4 years ago, just over 4 years ago now, we joined forces and founded Ozone. And our mission is really to accelerate both open banking and open finance. In fact, I prefer to talk more about open finance because it's a superset of open banking. And we do two things. We ultimately, our core business is providing the enabling technology to help banks and FIs deliver great APIs to meet regulatory and commercial requirements. But we also work a lot with central players, regulators, central banks, to help them develop the standards and the ecosystem for open banking so that it can really work in the right way in a market. There's been a lot said about open banking and how important it is for the economy in general, and how much it's going to drive organic growth, and how much it can boost revenues for banks. But I think it's also, there's a bit of a kind of watch out, because if banks don't do it well, it can also pose a risk for banks particularly, and that's key. This is all about doing it well and with the right incentives. It's a global phenomenon, and that's why I say open finance, because in some markets such as the UK and Europe, it's a little bit limited in terms of some of the product sets and accounts. But in other markets such as Brazil, we're already well into the sort of open implementation of open finance, which is effectively extending into other financial service products that go beyond banking, such as investments, savings, and insurance now in Brazil. And in Australia, it's going even beyond that into something called the consumer data right, which touches into all sorts of other sectors like energy and telecommunications. So open banking and open finance is a sort of progression into a wider open data economy, and it's a global phenomenon. It's actually been around for over 20 years. The old model of open banking was screen scraping and credential sharing, and it's worked up to a point. But the new model is that we're seeing certainly in the markets there that are in dark blue, where there's a regulatory framework. Typically, there is one or more standards that are mandated or recommended, and where the regulatory framework is designed to protect customers, but provide assurance that it's only financial service regulated, authorized financial service institutions who can play in this ecosystem. In the UK, what happened back in 2016, 2017 was the Competition and Markets Authority created a competition order that required the 9 largest banks, the CMA 9 as they're collectively called down the bottom there, to implement a common standard to open up APIs for personal and business retail bank accounts. And open banking in the UK, what that's effectively meant is that the 9 largest banks were mandated to implement a standard to offer APIs to the market free of charge. And it was also a sort of stepping stone to something called PSD2, or the Second Payment Service Directive. And OBIE's role as an independent entity or body was to effectively govern or oversee the implementation of the standard. Well, actually, firstly to develop the standard, but secondly to oversee the implementation by the CMA 9. And the CMA order, it only covers personal and business current accounts, and there is a single mandated standard, whereas the Second Payment Service Directive covers all online payments accounts. It covers all ASPSPs, as they're called, all banks basically in the UK and in Europe. But there isn't a mandated standard. So there are a number of predominant standards across Europe, including the UK standard, but there isn't a single mandated standard for any bank other than the CMA 9. But what's a much bigger thing is actually, what does the market need? What do customers need? And really what they need is open finance, which means all financial service products, and they want access to data from all FS providers. And I think the market also, when I say the market, this is both banks and third parties, are getting used to the concept of something called premium APIs. So regulatory APIs are where there is a mandate to provide them, typically free of charge, and premium APIs are where it's somewhat optional, but banks can start to provide APIs that they monetize that go above and beyond in terms of the scope and coverage. So there's an interesting sort of Venn diagram here of, actually you can see that the CMA order was a bit of a small thing, but it's PSD2 is a bigger thing, and the actual market is crying out for still more. I'm not going to go through this in detail. In fact, these slides will be available afterwards, I think, to anyone who asks. But it's taken a while, is the key thing here. So OBIE was formed in September 2016. The first standards were really published in 2017. And the banks were supposed to be live from 2018, but really it's taken several years of hard work, both in the UK and Europe, for banks to actually implement APIs to a quality that's really usable. And we're seeing that in the UK with March 2 years ago, March 2020, 1 million customers were then starting to use these APIs, 2 million soon afterwards. And beginning of last year, we had 5 million customers using open banking APIs in the UK. It's probably very close to 10 million now. That's individuals and businesses. And in grey, there's a bit of a question, what happens next? And we'll talk about that in a minute around open finance, and is that going to be a thing? So what we did when we were developing the standard, the first thing we had to do is build a consent model. So unlike a lot of other APIs where you have effectively a developer has an API key and can access data, the open banking or open data model involves the customer as well. So the third party is the data recipient, if you like. The bank is the data provider, and the customer is very much involved in that process in terms of granting or authorizing consent to access the data. I'm not going to talk a little bit about this. I'm not going to talk about this in too much detail, but this is a fairly, I suppose, traditional or classic OAuth model. And this is really right at the heart of how we constructed the design of the APIs, so that the customer is ultimately in control, and both the bank and the third party are only accessing data that the customer has given explicit consent to. When I say accessing data, that's both read and write. It covers account information, payment initiation, and also something called funds confirmation, which is another regulatory type of access under PSD2. The standard goes beyond just API specifications. So building from that consent model, we developed a security profile. We did that in conjunction with the OpenID Foundation. It is something called the FAPI profile, which stands for Financial Grade API Profile. And that really is a sort of overlay on top of OAuth and OpenID Connect. And it defines the security model for connectivity and consent in summary. And what we're seeing now is many other Markets across the world have now adopted this FAPIs profile. There are actually several versions of it, but it's become the de facto global standard for securing open APIs. Obviously, the API specifications themselves, we've grouped them into a number of supersets or API groups, such as account information transaction, the read API, payments initiation, but there are quite a few other elements to that. There's a funds check API, there's an event notification API, etc. It's a framework that's modular and extensible. It's based on ISO 27001, but it's a full sort of REST API design. But that wasn't enough, because what we saw when the banks started to implement the APIs, that they created very clunky, unusable journeys for how customers are supposed to authorize to gain access. So we ended up creating something called the Customer Experience Guidelines, which set out recommendations / obligations for both third parties and banks in terms of what a customer experience should look like. And that's really designed to reduce friction and create APIs that are actually usable from an end customer point of view. And it covers a series of sort of redirect and decoupled authorization flows. But we went a step further and also developed operational guidelines. This is something that, again, we realized that the market needed some clarity around what good looks like in terms of availability, performance, how banks and third parties, or banks particularly, should report on availability and performance, and how banks and third parties should engage around things like testing, problem resolution, change management, etc. So it's quite a comprehensive set of that together is called the UK standard. And as with the security profile, it's something that most other markets now are looking at this model, not just a set of specifications, but including the security profile, including the customer experience and operational guidelines. Something else that the UK developed was something called a directory, which is effectively a trust framework that is designed to enable a complex, multi-party, multi-market trust framework. So you've got on the left across Europe hundreds, if not thousands of, it's hundreds at the moment, but it could be thousands of authorized third parties. On the right, you've got 6,000 odd account providers or banks now in Europe. And you've got a number of qualified trust service providers. These are certificate authorities that have been given or approved as issuers of certificates that have to be used to a certain format in the UK and European construct of open banking. And then at the bottom of that, you have a number of what is called national competent authorities. These are the regulators, the 27, 28 regulators across Europe. So this was something that was developed by we developed when we were at the OBIE as a construct. It's arguably less important if you're in a single market, and obviously Brexit has changed the game somewhat. But in other markets where there are lots of banks and lots of third parties, it's being seen as an absolute must-have. In markets where you've only got a handful of banks and a handful of third parties, it's arguably not really necessary. But the key thing is you need to have clarity around both the identity of banks and third parties, so they know who each other are when they're talking via APIs. And you also need to understand the regulatory authorization of those banks and third parties, so that you know not only who you're talking to, but do they have the authorization to either provide or access APIs, i.e. it is a trust framework. Another thing that the OBIE has done, I think pretty successfully, is navigated this very complex space where you've got banks and third parties quite often disagreeing about stuff, but also needing help in terms of going through testing, rather than relying on lots of banks and lots of third parties to test things individually, providing some sort of central framework to help the ecosystem. And it's been absolutely essential, and something that I think many other markets look at and say we need something like that, because it's a really important part of helping grow the ecosystem. Something that we're very proud of at Ozone. We are the official providers to the OBA of something called the Model Bank or the Sandbox. It's something we do for a number of other regulators, and all of our customers, all of our banks as well. We provide sandboxes, which are effectively a fully working, fully functional bank ledger with an API layer on top, but it simulates a real banking system, but contains entirely dummy sample data, no real customer information at all. But it's designed to look and behave like a bank ledger with an API on top of it that's 100% conformant to a production environment. And this is something that's really proved essential both for regulators as they are implementing or designing standards in their markets, so that third parties particularly can start connecting and experimenting and building applications before the banks are ready. And it's also essential for banks as well, because they can do pre-release versions of their APIs before they put them into production, and it enables that testing in a safe environment. Something else the OBIE has been doing, very, I suppose, controversially, shall we say, is monitoring the CMA9. So this is providing an oversight service, if you like, on behalf of the CMA, the Competition Authority in the UK, to, I suppose, make sure that the APIs are behaving as they should. And here are some screens from the OBI's public website. So this is an average across the CMA9 of availability. You would have thought that in the modern world, you could make APIs that are 100% available, that never go down. Some banks can manage that, but many of the larger banks can't. They're not all properly in the cloud yet, and sometimes they have lots of very complex systems that go offline at certain times of the day. And obviously, if your underlying system isn't working, then your API isn't working either. Performance, though, has been something that has been improving. These are averages, and you've got to bear in mind across lots of different banks, different types of accounts, different data sizes. But you know, API response times, typically a good response time you would expect to be in the 100 milliseconds or so. But if you average that across business accounts where you're pulling lots of data, and also complexities around real-time certificate exchange, etc., then this is a positive trend when you're getting down to, from what was close to a second a few years ago now down to closer to half a second. It's a significant improvement, but probably, well, certainly some of the smaller challenger banks are a lot better and a lot faster because they have more agile, more modern systems. And conformance and certification is a big hot topic, not just in the UK, but in many other markets. It's something that is mandated for the CMA9, that they have to run a set of approved tests and be certified every time they implement a new version of the API. There's a functional conformance suite in the UK, which my team developed for the OBIE, and we have a security conformance suite that's been developed by the OpenID Foundation. This isn't just a UK thing. Again, many other markets are looking at implementing this, not least Brazil have got a very, very strict regime of conformance and certification. It is a brilliant thing if it's done well, because if it's implemented consistently, because it means that you have got assurance that the APIs are designed and built properly, not particularly from a security point of view. But what does that mean in terms of adoption? So again, this is just the CMA9. It is about 80%, give or take, of the UK market. So you can multiply this by a little bit to get a more accurate figure. What we've seen is the volume of API calls per month increasing from nothing at the start of 2020. And I mentioned this is, open banking was supposed to go live in 2018. It really didn't to any meaningful degree, but you can start to see that you're getting some decent volumes in terms of API calls now, and it has been steadily growing. It flattened off a little bit, and I'll talk about use cases in a minute. So in terms of payments, this is really the interesting area. So payments have become, they were initially the poor cousin, if you like, of open banking. It was all about account information, aggregation, cloud accounting use cases, and we'll talk about that in a second. But payments have really been the recent growth in terms of number of payments, value of payments, volume of customers using open banking payments in the UK. After 5 years, roughly, we got, the UK is the first major market to implement this new model of standards-based open banking in a regulatory framework. We've got over 200 authorized third parties, 79 odd banks, FIs implementing the standard. This was in 2021, 5.8 billion API calls. I think over £5 billion of tax payments were made recently last year to the HMRC via open banking. It's now the kind of default recommended proposed option for making a tax payment, which is very positive. And I said over 5 million users this was last year, but actually it's probably closer to 10 million if you factor in recent growth and other banks other than the CMA9. So it's starting to work. Use cases, the first one that went live was personal finance management. Fairly obvious use case, aggregating banking accounts from multiple providers into a single dashboard to help give insights and provide customers with a better oversight of their financial situation, their spend, etc. Very interesting use case on its own. Is it groundbreaking? Does it deliver everything? Well, no, not necessarily, because quite often it's limited to just retail banking and doesn't cover other things like savings, lending, investments, etc. Cloud accounting integration was the thing that really drove the initial growth in the UK. It's now become pretty much the norm for any business which is most businesses who use cloud accounting packages now, not least because it's almost essential if you want to file your tax returns on time. And integrating your cloud accounting packages by open banking APIs is now pretty much the main pattern. So that drove the growth, but it's kind of flatlined a bit because most cloud accounting packages and most banks now support this via open banking. Lending is a really good use case. So we're now touching onto a use case which gives obvious value directly to the bank. So banks can partner with fintechs to provide access to their accounting to provide fintechs access to their customers' data, but also banks are starting to effectively consume the APIs of other banks via a third party, so they can do better real-time credit assessment, credit risk assessment, verifying income, etc. And this has really driven a huge amount of usage of open banking and huge value to banks as well as to fintechs, and of course huge value to customers because they get more speedy decision making. Payments, though, I mentioned before, is the real growth area, and that's really exciting. We're starting to see lots and lots of different payment use cases. The most recent one, which is I'm not going to touch on in too much detail, is something called variable recurring payments, which has been seen as a really innovative new payment mechanism. It was mandated on the CMA9 for what is called sweeping. So this is helping customers move money between accounts that are in their own name. But it's really, really useful for other things that are beyond sweeping. These are in this, what I call premium API space. They're not mandated, but banks can use this too. And they're starting to launch trials in the UK where they offer these VRP, non-sweeping VRPs to the market for a fee. But what it enables is things like subscription payments, and it's being seen as touted as a genuine alternative, and probably a much better one than things like direct debits and standing orders, because it's based on the open banking consent model. So the customer's got transparency and control, and it's much more programmable than direct debits. What's next? So I kind of touched on this really, that open banking is 5 years old. We've got probably 10 million users now in the UK, and this is just the UK and I'm focusing on here. Premium APIs, VRPs, identity, some of these other use cases that weren't part of PSD2 nor the CMA order, these are starting to drive usage and excitement, but this is tip of the iceberg. Open finance, where we are extending into other financial products such as investments and pensions, etc., this is really going to drive a lot more value. You know, the use case around aggregation, around you know, these kind of smart wallets and personal finance managers get much more valuable, much more useful if it's an open finance application and can access other products. But really smart data or open data where you're looking at all sorts of other data gets really, really interesting. That phrase, data is more valuable in the presence of other data. Best example of that, really, I think, that we're starting to see people talking about and investigating is what I'd call open retail, where you're looking at basket level data. If you can put basket level data from retailers, combine it with your banking data into an application, whether the bank owns the application or builds it, whether a fintech builds it, think about the value you get from a consumer. You get the ability to get real-time loyalty offers, etc. From a merchant, you get much better stickiness, much better conversion rates, and generally you can do all sorts of clever things with advertising. So that holy grail of not just seeing advertising that something you've looked at online, but seeing advertising that's relevant to what you've actually bought is very powerful. So I think that's going to be a big use case next.
Hey, Chris, unfortunately, we are past time.
Okay.
But I know if you could just skip to your last slide, these will be available for everyone. And then that last one has a way to contact you. So we didn't have a chance for questions, and I know people will definitely have those. So apologies for cutting you off, but we definitely want to make sure we entertain everyone today with different speakers. So thank you so much for that.